Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Thursday, September 29th. We're seeing some solid gains in early trading as stocks on Wall Street win back all of yesterday's declines. Futures got a boost from two positive economic reports this morning. The final reading of second quarter gross domestic product showed 1.3% growth. That was up from the prior reading of 1% and a slightly bigger upward revision than economists predicted. The improvement was due to a pickup in consumer and construction spending. But the growth rate is still relatively slow, and combined with the 0.4% expansion in the first quarter, GDP over the first 6 months of the year amounted to just 0.9%. That number indicates an economy that is still very soft and vulnerable to shocks such as the European debt crisis.
We'll get to the latest on the sovereign debt crisis in just a minute, but first we have some data on the U.S. labor market to tell you about. 391,000 Americans filed for first-time unemployment benefits last week, the lowest level since April. The decline of 37,000 was much bigger than expected, helped by the fact that the previous week's reading was revised higher. The drop also pulled down the 4-week average of jobless claims, a more accurate gauge of employment trends, by more than 5,000 to 417,000. However, a government official suggested the weekly decline may have been due to a variety of technical issues not captured by normal seasonal adjustments. And even if the reading was entirely accurate, economists say the 4-week average would have to come down much further, to below 400,000, and stay there for an extended period to indicate a healthy labor market.
As we mentioned, U.S. stocks are getting a boost from the data, and the major European markets have turned higher as well. Investors across the continent may also be drawing some comfort from a vote by German lawmakers this morning. The Bundestag, Germany's lower house of parliament, voted 523 to 85 to expand the powers of the Eurozone Rescue Fund. If the measure gets through votes by the rest of the 17 member nations, which is almost sure to happen, the European Financial Stability Facility will have the power to buy sovereign bonds and provide credit lines to struggling governments. The vote seems to be restoring some confidence in the ability of the European Union to tackle the sovereign debt crisis, and that's helping the euro recover more lost ground against the US dollar. Meanwhile, investors are moving out of US Treasuries, pushing the yield on the benchmark 10-year note back above 2%. And the dollar's relative weakness is giving a boost to commodities, especially oil prices. Crude is rising nearly $2 and is now back above $83 a barrel.
In the equity markets, financial stocks are among the biggest beneficiaries of the German vote and the day's strong economic data. The 4 biggest U.S. banks, Bank of America, Citigroup, Wells Fargo, and JPMorgan Chase, are all sharply higher. The biggest winner among the group is Bank of America, with a gain of nearly 4%. We're also seeing big gains in shares of Enterprise Product Partners and Enbridge. The two firms proposed a new 500-mile pipeline from Cushing, Oklahoma to the Gulf of Mexico, which would carry up to 800,000 barrels of crude oil a day. But one of the day's biggest stock decliners is Advanced Micro Devices. The chipmaker cut its revenue and gross margin estimates for the current quarter, due partially to manufacturing issues at a German plant. AMD has posted strong results in recent quarters, but some analysts fear that the company will take a hit as a growing preference for tablet computers cuts into PC demand. Following the outlook cut, Bank of America Merrill Lynch downgraded AMD from neutral to underperform and lowered its price target on the stock. AMD shares are tumbling 10% on the news. That's the latest from Weiss Research. Have a great trading day.